Benchmark, the voice of business. Presented by LMD.
On this week's edition of Benchmark, our lead story takes a look at the latest tourism data which suggests that tourist arrivals continue to rise. Then in our feature segment, we turn the spotlight on N.R. Gajendran, partner of Gajma & Company, for his thoughts on Budget 2012. And we wrap up this edition by talking to LMD columnist Samantha Amarasinghe about the impact of another recession in the US. That's the lineup for Benchmark this week. Hello and welcome to Benchmark. I'm Savitri Rodrigo. We start our show today with a look at the latest tourism data, which indicates a 35% increase over last year's inbound arrival figures for the first 8 months of 2011. Nearly 538,000 tourists graced our shores between January and August, with the highest component coming from faraway Western Europe, led by more than 70,000 Brits. India is our largest market, with around 107,000 travellers taking the short-haul flight to neighbouring Sri Lanka during this time. That's 45% higher than in the first 8 months of the prior year. So, LMD's prediction that the end-of-year count will not be far off the 900,000 mark and far ahead of Sri Lanka Tourism's 750,000 target for the year is certainly intact. Other notable comparisons relate to visitors from the Middle East, 54% higher this year than in 2010, and the fact that although we continue to attract large numbers from Britain, the first 8 months of the year saw a mere 3% improvement in this segment. On to monetary policy matters. The Central Bank of Sri Lanka's Monetary Board resolved on the 15th of September to maintain policy interest rates at their current levels, which means that the repurchase and reverse repurchase rates will remain at 7 and 8.5% respectively until its next meeting, which is scheduled for October the 10th. The board states that although commodity prices have continued to remain elevated in international markets, improved domestic supply conditions and the stability of the Sri Lankan rupee have helped contain inflation. It adds that CBSL has also absorbed the proceeds of sovereign bonds issued recently. And the rate of inflation appears to be stable. At the end of August, the Colombo Consumers Price Index shed half a percentage point to 7% on a year-on-year basis and nudged upwards from 7 to 7.1% in annual average terms. Let's just say that officially prices are now rising at around 7%, whereas the ballpark rate at the same time last year was 5%. CBSL's Department of Census and Statistics says in a press release that the 0.3% dip in the index in August came mainly from lower prices for food and non-alcoholic beverages. Against a backdrop of supply-side improvements, prices of almost all varieties of vegetables, coconuts, coconut oil, rice and red onions declined. In the meantime, the central bank says that year-on-year core inflation, which has been on the rise since March, dropped sharply from 8.9% in July to 7.8% a month later. CBSL states that the favourable outlook for domestic activity augurs well for domestic prices going forward. Meanwhile, a press release from CBSL last week notes that workers' remittances increased by some 21% to $415 million in July, versus the same month last year. Coupled with healthy growth in tourism-related inflows and proceeds from the sale of sovereign bonds, $1 billion, our gross official reserves increased significantly to $8.1 billion at the 31st of July. Based on average expenditure in the last 12 months, this represents 5.7 months imports. And finally, provisional data released by the central bank has Sri Lanka's trade deficit standing at a whopping $5,077 million at the end of July, compared to a revised balance for 31st July 2010 of $2,860 million. That's a jump of 77%. In July, both exports and imports rose because of growth in machinery and equipment, diamonds and jewellery, and apparel exports, and petroleum and fertilizer imports. In cumulative terms, the first 7 months of this year produced hikes of 30% and 48% in exports and imports respectively. We take a break for some messages from our sponsors now. When we return, we bring you an exclusive interview with N.R. Gajendran of Gajma and Company. Stay with us.